Welcome to this explainer. Today, we're tearing into the sheer scale and frankly explosive Q1 2026 financial results of the telecom giant América Móvil. If you follow the global telecom sector, you already know that navigating mature markets, heavy capital requirements, and intense regional competition is no small feat. Yet, América Móvil has just posted numbers that demand a much closer look. We're going to use the data right from their latest SEC filings, corporate reports, and Fitch ratings analysis to figure out exactly how they are pulling this off.
Okay, let's look at our roadmap for today. First, we'll cover the Latin American telecom giant's footprint. Then, that Q1 2026 financial explosion. Third, subscribers and operations. Fourth, M&A and shareholder returns. And finally, ratings and future risks. Let's dive right in. Section 1. The Latin American telecom giant. Let's establish exactly what their market dominance looks like on a macro level.
So América Móvil operates across a staggering 16 countries in Central America, the Caribbean, and South America, plus they have a really major presence in Austria and Eastern Europe. We're talking about an absolutely massive portfolio of dominant regional brands. In Mexico, you've got Telcel for mobile and Telmex for fixed line. Across most of the rest of Latin America, you probably know them as Claro. And over in Austria, they operate under the A1 brand and even run a tower company called Eurotelesites. It's a truly massive geographic footprint.
The crucial takeaway here is that they aren't just a big player. They are the largest multinational communications service provider in all of Latin America. According to analysts over at Fitch Ratings and Inside Towers, this immense scale is actually their primary defensive moat. You see, it significantly mitigates sector risk because their revenues are spread out across so many diverse countries, currencies, and customer classes. It's like a giant financial shock absorber. When one market faces headwinds, another one is right there to balance the scales.
All right, moving to Section 2, Q1 2026 financial explosion. Let's dig into this incredible top and bottom line growth.
Now, I want you to take a look at this massive number, a 25.1% year-over-year jump in net income. Just let that sink in for a second. For a giant, mature telecommunications company, generating a quarter-over-quarter net income jump of over 25% is just staggering. So, how exactly did they pull this off?
While looking at the raw data, the top line is incredibly healthy. Total revenue reached 236.8 billion Mexican pesos, which is a really solid 6.1% growth at constant exchange rates. But here is the real kicker. EBITDA grew by 8.0%, completely outpacing the revenue growth. That points to some fantastic operating leverage. Their consolidated EBITDA margin hit roughly 40%, which, according to management, is among the highest levels they have literally ever seen. Basically, they're getting significantly more efficient as they scale. And to visually ground that incredible 25.1% growth, we can see they leaped from 18.7 billion pesos in Q1 of 2025 all the way up to 23.4 billion in Q1 of 2026. That translates to earnings of 39 peso cents per share, or 44 US cents per ADR. But, this wasn't purely driven by operations alone. It was also fueled heavily by the finance department. They saw a 9.9% decline in comprehensive financing costs, largely driven by lower net interest expenses. And that played a massive role in dropping more of that operating profit straight to the bottom line.
On to Section 3, subscribers and operations. Let's look at the actual people behind those massive financial figures.
Get this, the company boasts a staggering 414 million total access lines across its entire global footprint. To put that into perspective, that includes 334 million wireless subscribers, 37 million broadband accesses, 14 million pay TV units, and 29 million landlines. It's just an enormous, highly connected user base.
Now, when we look closer at the mobile side, this comparison really highlights a shifting consumer base. They are seeing incredibly strong momentum in the highly lucrative postpaid segment, adding 3.1 million net new subscribers. Brazil was the absolute star of the show here, bringing in 1.3 million of those clients alone, followed by some really solid additions in Colombia and Peru. On the flip side, though, they shed 90,000 prepaid accounts, primarily in Mexico, Chile, and Eastern Europe. So what's the big takeaway here? The quality of their revenue is improving. Postpaid customers provide that steady, predictable, higher margin revenue that companies absolutely love compared to prepaid users.
Let's pivot to fixed line operations for a second to build out the full picture. Broadband growth is actually a major catalyst right now. They connected 594,000 new broadband accesses in just a single quarter. Mexico and Brazil were the heavy hitters here. And here's an interesting tidbit for you. Because mobile penetration is already so high across Latin America, Fitch Ratings actually anticipates that América Móvil's growth in broadband subscribers will continue to outpace its mobile subscriber growth in most of their key markets.
Section 4, M&A and shareholder returns. How is management actually allocating all this cash?
Well, the cash generation engine is running red hot. Free cash flow swung positively to 3.3 billion pesos for the quarter, which is a sharp improvement from a 400 million peso deficit during the exact same period last year. Because of this, management is signaling immense confidence. They're proposing an ordinary dividend of 0.54 pesos per share, and on top of that, they're asking shareholders to approve a massive 10 billion peso allocation for a share buyback fund running all the way through April 2027. That is a serious commitment to returning value.
But they aren't just sitting on their cash. They're still expanding. In late March, they announced an agreement to acquire roughly 73% of the capital stock of Desktop SA to bolster their operations in the crucial Brazilian market. Now, this is obviously subject to approvals from Brazil's antitrust regulator and their telecom agency, but it shows they are aggressively protecting and expanding their footprint in their absolute highest growth market.
Finally, Section 5, ratings and future risks. Let's examine their credit standing and some of the potential hurdles ahead.
So Fitch Ratings gives them a very solid long-term issuer default rating of A- with a stable outlook. Fitch explicitly notes that their geographic diversification is superior even to investment-grade U.S. peers like Verizon and Comcast. But, there is a ceiling here. About 85% of América Móvil's EBITDA comes from countries with sovereign operating environments rated below A-. Operating in emerging markets naturally carries inherent currency and macroeconomic risks, and that fundamentally limits how high their overall credit rating can go. Plus, Fitch warns that as operators try to increase network density, competition in both mobile and fixed broadband is going to remain absolutely fierce.
But looking at this cash flow statement, they definitely have the war chest to handle it. Their liquidity comfortably covers a massive 21.6 billion pesos in capital expenditures, which is absolutely crucial for their 5G and fiber rollouts. And amazingly, they are doing that while simultaneously funding buybacks, covering labor obligations, and literally reducing their net debt by 1 billion pesos in cash flow terms.
Because of that highly disciplined capital allocation, their leverage remains incredibly manageable. At the end of March, their net debt to EBITDA after leases ratio was sitting comfortably at just 1.41 times. Honestly, in a capital-intensive industry like telecommunications, maintaining leverage that low while continuing to grow earnings by 25% is a true testament to some highly efficient operations. So as we wrap up this explainer, we're left with the ultimate question for analysts and investors. We've seen their masterful shift toward high-margin postpaid and broadband users, and their aggressive expansion down in Brazil. But as market penetration maximizes and competitors keep fighting for the exact same users, how will this telecom titan navigate the battleground to maintain this incredible momentum? The foundation is clearly solid for sure, but the next few quarters will really dictate if this explosive 25% profit growth is a permanent new baseline or just a cyclical peak. Thanks for joining us today.